Hello everyone. Well, first Friday of the month, and well, that means non-farm payroll. Today, well, it was a real shocker for the books. We had a terrible number. We actually look at what was expected and what actually came out. So here is the actual headline figure. Expected was 74,000 jobs created, and it came out flat, 0. So there wasn't no jobs created at all. And the previous 2 months job numbers also got revised down. So all in all, it was a terrible number. The hourly earnings also dropped by 0.3 from 0.2% increase expected to -0.1, and the unemployment rate stayed the same. So let's have a look at the reaction to this number from various asset classes, and let's start off with the Bund. Right, this was at 130 pre-release. You know, we were trading at about 136, 136.03, 02, 01, around there, and then the Bund has been actually pretty bad in terms of having some wild moves before its number, before this number. But today it was actually relatively stable, and we had a 50-tick spike up on the move, which was a very big one, and pushed this Bund close to the 137 level in the Sept 11 contract, which is pretty crazy, really. Meaning yields are at minimal level, and I think, you know, safe haven's the only play. No one's actually caring about return or anything. The play right now is just keep the money safe. No one's everybody's sort of piling into these safe haven government bonds, and it also raised the expectation that we might get QE3 from the US. But we had a 50-tick move there, and then since then we pretty much just consolidated, sort of went sideways for the next hour after that, and then once the US opened, we have another push up here, another 40-tick push up on the Bund, and since then we've been pretty much going sideways in about a 20-25 range. And so as you can see, the high of the previous move, 136.69, proved to be a support at 136.69, sort of bounced off when we broke through, went back, tested the high after the US Open, broke it slightly, and then we've come off. If you look at on the 60-minute chart, we could sort of see that we were actually consolidating, into a narrow range over the past couple of weeks, and we rallied from 133.75 to 135.75, and then it sort of formed this wedge pattern. There's a couple of false breakouts over here, and as the range was getting smaller, we were actually just in a 50-tick range before we got the initial breakout, and that was the day before yesterday, and then it continued going, and this was today when we got the actual move on non-farm, which actually broke the previous high that we had a couple of weeks ago. So this was it, and the thing is that this contract is going to be expiring soon, so we're going to actually move to the Dec 11 contract. So that's about 200 points, 150 points lower at the moment, as you would expect, since it's got another 3 months on the books. But it wouldn't be surprising if this gets around 130, that contract gets around 136, 137 soon as well, if more bad data keeps on coming in. But here's the actual interesting chart. This is the S&P 500 just before the number. 1 minute before the number, in fact it was about 10 seconds before the number, we just had a spike up in equities. We had a $6 move on the S&P 500, which is 24 prices. This must have, in truth, just caught so many traders out, because what people tend to do just before numbers is do stop entry, so they'll put a stop order either side, and hopefully when there's a move that comes, it sort of triggers their stop, and then they can hopefully go in that direction. But with this type of move over here, it actually happened so fast that many stops were triggered, and before you know it, the number came out bad. and it went all the way down, and it was just a pretty brutal move really, and I can imagine many people getting hurt on that one. Definitely, it wasn't a nice number to trade in terms of the equities. But the after action, once it had its move down, we moved another. Well, we moved $12 down on the move, pretty much, and then it sort of consolidated really in about $9 range roughly, and sort of after the move we came up and we tested this 118.475 level, came off, tested it again, had a double bottom at the bottom and a double top there, and then we tested it again to the tick pretty much, held that level again, and now I guess we're heading back down again. So it'll be interesting how long it stays in this range. I can't really see it really breaking this range until Monday maybe, but it'll be interesting to see. But it's been a nice steady, decent range. Levels held very well over here, and if we sort of go on the bigger chart, you can just see there, nice double top, triple top actually, from the initial move down, and then we had a nice double bottom over here. So it'll be interesting to see what happens next on that. And there's a similar thing in the FTSE and pretty much every equity index. This is what happened with the FTSE. We actually had the move on this was much more exaggerated due to the thinness of the contract. Pre-release we were 5,331. We actually had where did we have? We had a 40 ticks. 40 tick spike in the FTSE, 0.8% just before the number, and then we came off 80 ticks. So, looking at the actual move from the pre-release price, we only really had a 40 tick move down on that sort of number, which was sort of implying that I think yesterday's sell-off and today's weakness sort of was anticipating a bad number, and I think a lot of the jobless numbers and the ISM manufacturing was sort of indicating that the jobs picture wasn't very good. And similar to the S&P, we then just ranged, didn't hold as perfectly as well as the S&P, but we still sort of had a little bounce up, and then we had a nice double top over here. If you look at the 5-minute chart, you can see it's not quite as nice as what the S&P 500 was showing, but again, double top over here, and we've rallied quite a bit in the last couple of weeks. If we look over here, you can see this the move up in the last week, 2 weeks, and since then now we've sort of come back, and I think the next level we can really test in FTSE right now is the 5,200 level, nice round 5,200, which would pretty much retrace the whole move of the last couple of weeks. So I wouldn't be surprised to see that at all. As we can see 3 thin bars there at the double top at 5,296, or roughly the 5,300 level. So so it doesn't look very good for stocks really, and that number pretty much emphasises that there's a big problem, and this was actually the worst number we've had on the US job front since September the 10th last year. So it's pretty much a year to the date it's been the worst number, so not looking too good. But anyways, I'll just wrap it up for there. It'll be a very interesting week next week given this number, and I think equity is just dying to see any good numbers from any of from any figures coming out. We got ISM non-manufacturing tomorrow. Non-manufacturing on Monday or Tuesday, I think, and we have retail sales coming up as well. So a good number either way, might help restore a bit of confidence. But otherwise, it looks pretty glum at the moment. Anyways, have a nice weekend.